Good morning. It's Wednesday, August 14th, about 6 a.m. Central Time. Overnight, the precious metals are slightly higher after yesterday's mixed session. You have December gold up $4 at 25.12. September silver up 20 cents at $28. 28 seems to be a key level, a bit of a bull-bear line, a bit of a pivot point. You look at September copper up 2 cents at 407, and October platinum at 950 up $4. U.S. equities are about flat coming into this big, huge inflation day, and then crude oil futures slightly weaker. A lot of discussion about ceasefire talks in the Middle East, and Bitcoin is essentially unchanged right now. So yesterday we saw the July PPI data come out lower than expected, just rising 0.1% month over month. The markets continue to price in deeper interest rate cuts, pushing the two-year Treasury yield down to 3.87%. That broke the dollar index, and it pushed investors back into risk assets such as U.S. equities. The Dow Jones Industrial Average rose 1%. The S&P 500 rose 1.7%. The Nasdaq rose 2.4%, and the rally was quite broad-based, with 425 stocks in the S&P 500 all closing higher. So traders really believe that inflation is behind us. Later in the session, we saw Atlanta Fed President Raphael Bostic say that a recession isn't in his outlook, and the Fed funds futures. So you got to bookmark the CME's Fed Watch tool on your toolbar here. Google the CME Fed Watch tool. It will default to the September meeting, and you can see that Fed fund futures are now pricing in a 54.5% chance that the Fed will cut 50 basis points at its September policy meeting. I'm slightly leaning to the 25 basis points. I don't think the Fed will cut that fast unless we get crude oil futures substantially higher, or we get these recessionary blows come in here like what we saw about 2 weeks ago when the stock market was under significant pressure. So today we're going to see CPI day, and U.S. forecasters are expecting a modest 0.2% increase in both the consumer price index and the core gauge. The core is what the Fed watches the most. That's what excludes that food and energy. So looking at the other markets here, that's basically all we're going to focus on. So it's going to be a big surge in volatility in the markets. If you look at gold futures overnight, kind of bouncing off of our tactical resistance and support level. So 25.25 is your tactical resistance. 24.87 is your tactical support. You look at the overnight session, 24.94 on the low side, 25.18 on the upside. But we should see a surge in volatility. We don't want to see this number deviate too much from the mean here. We don't want to see an unexpected big negative number or things like that, because it could really throw the markets into quite a surge of volatility. Now, I did discuss here yesterday that the price of copper and the price of silver, the chart patterns are nearly identical, and it really tells you that, again, China, the biggest consumer of copper, is really the key behind this. You got to get that demand recovery, and if you Google search BHP, you could see that there are discussions about the potential for a labor strike. The last time we saw this, it was about 44 days. That's what really boosted copper futures at one point. So you're going to want to watch that if it's trending on Twitter or X or whatever you call it here, because you look at copper and silver, both peaked on May 20th, both rallied to lower highs on July 3rd and July 5th. Silver did hold the 200-day moving average. Your critical support on there, again, the 200-day, but you've got to get it back above that August 5th sell-off of 28.81. Then you can reverse the trend if you can close back above the 50-day moving average right around 29.67. Now, if you look at the copper market, it needs to get back above 415, and that would be its 200-day moving average. If you like to see some of the charts, some of the write-ups and things like that, some of the tactical support and resistance levels, we do put out premium content for our clients. You can go down and look at the Metals Edge and register for a free 2-week trial there. You go to the gold market. Now, gold is much more constructive. It's up again today. We were slightly higher yesterday. We recaptured the bull trend. But if you look on a 3-4 month basis, we're trapped in a channel right now. We really need to see continuations of these rally higher. The critical level of support, I think, is the 50-day moving average, 24.30. You don't want to see prices trade below there. I think a lot of traders will start to cut positions down as we could be going back into just a neutral trading affair. You want to have your close-in support here at the low here from the August 12th low, which is going to be 24.62. I believe there's pocket support down to 24.50. So if you got any questions on futures option trading, and I really encourage you to register for a free 2-week trial on the Metals Edge, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.